Yeah, good morning, everyone. So, yesterday, US market continued its bounce back and even crossed the few days high from where it has fallen. So, giving more of a positive trend indication. Apart from that, Asian market, most of the market are closed except Japan and Australia, which are both positive in today's trade. So overall looks positive environment, and we may see reflection of that in Indian market as well. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. Yesterday, we have seen a flat trading session in the Nifty front, but Nifty somehow managed to maintain positive using about 18,100 level, which gives some sort of a relief sign. Now, today, looking towards the Asian markets, our market is likely to open with a gap of opening at around 18,180, 18,200 levels. Any more above that level, 18,200 level, this positive momentum rally is likely to be extended towards 18,270 to 18,300 levels. Whereas on the downside, as of now, the immediate support would be placed at 18,100. Any move below that level will witness some sort of a profit booking, which may take a Nifty towards 18,700. The pullback view is likely to be continued as long as Nifty sustains above 18,000 psychological levels. Coming towards the bank Nifty, yesterday we have seen a gap up opening into the 50 as per the positive closing above 42,800 level. Now this pullback rally is likely to be extended towards 43,000. This will be the first resistance level. Any more above that level will extend this pullback rally towards 43,100 to 43,300 levels. Whereas on the downside, the first support will be at around 42,700, a support provided by its gap of yesterday's gap support. If it's entered into that gap, that is 42,700 level, if it's break that level, then 42,500, 42,550 levels can be seen. Coming towards the Nifty Finance, 18,970, 19,020 are the support resistance level we need to keep eye on it. Whereas on a downside, 18,880 and 18,800 are the two crucial supports we need to keep. The view as of now is we are strict that the pullback rally is likely to be seen into the market as long as those three indices will trade about the support levels. Now coming towards the stock specific, on the technical as of now, Reason Johnson's cement looks really good. The stock is trading at 107, 108 levels above that levels. I believe that the positive momentum is likely to be carried forward towards 118, 120 levels. One can take a long position into current market price. Stop loss can get at 103 levels for immediate target of 120. I think that's from my end. I request everybody to take a forward.
Thank you very much. Good morning, everyone. So, on the derivatives data front, if you look at the overall structure, as we mentioned in the previous session, also that once if Nifty manages to go above 18,200 level, then the positive buying will be witnessed. But currently, the new range for the Nifty which has been created is 18,050 to 18,200 level. So, the range has been shifted to the upper end. Well, if you look at the OI portion on the OI front, also from 1,700.
Amit, you are not audible.
I think he has dropped out. I think you can start now.
Yes. Yes, sir. Yeah. So on results front, Axis Bank result was above expectations, led by higher net interest margin and controlled OPEX. Net interest margin came at 4.26% versus sequentially 3.96%. Management did indicate that there in next couple of quarters there will be some pressure on cost of funds, so might be that NIMs can come down in next 2 quarters. OPEX grew by 8% year-on-year and 4% sequentially. This had been the pain point in the past where OPEX growth was always remained very high, but that has now tapered down. Profit before provisioning grew by 50% year-on-year and 20% sequentially. Asset quality was stable. ROA, ROE both reached multi-year highs of 1.9% and 19%, which is very encouraging. Stock remains cheap at 1.8 times FY24 book value, and we are positive on Axis Bank. Canara Bank result is above expectation, mainly because of expansion in NIMs. NIMs here also expanded to 3.05% versus sequentially 2.86%. Slippage also came down to 1.6% against 2%, which is encouraging. Credit cost also at 1.5% against 5-quarter average of 2%. So on all parameters, Canara has improved. ROA has reached 0.9% against 0.8% in September quarter. Stock is trading at 0.8 times price to book, so it seems like a value buy, can do well going forward. Karur Vysya Bank result is above expectation because of superior NIM, some benefit from other income, and also controlled OPEX. Bank made aggressive provisions and thus reduced the net NPA from 1.4% to 0.9%. ROA continues to improve every quarter. It has now reached 1.3%, which is commendable. And stock is also available quite cheap at just 0.9 times FY24. So we see good upside in Karur Vysya Bank. Poonawalla FinCorp, we will discuss the standalone result as the company sold the housing finance subsidiary in December. Result has improved. Loan book came at 14,000 crores, which grew by 28% year-on-year and around 8% sequentially. We think, going by management guidance, that they can grow at 30% CAGR over next 3-4 years. Base is also low, and the strategy of using digital to grow makes sense. Provision write back continued this quarter. Asset quality was stable. GNP at 1.7%, net NP at 0.9%. ROA improved to 4.5% versus sequentially 4%. So for an NBFC, this kind of ROA is very good. Stock is trading at 30 times FY24. So on PE basis looks a bit expensive, but on price to book at 3.6 times trailing. So from long-term perspective, we think it's a good compounding stock. Tamil Nadu Mercantile Bank result has improved on all fronts. Slippages remains low at just 0.8%. This bank is identical to City Union Bank and in fact more granular in terms of assets with better asset quality metrics, and even ROA has reached 2.2%. Yet it trades at just 1.1 times price to book, as there is pending issue regarding promoter holding, which the RBI has freezed in an escrow account. Until clarity emerges on this front, the stock will remain sideways. So we are neutral on Tamil Nadu Mercantile Bank. J&K Bank, that Jammu and Kashmir Bank result has improved because of lower credit cost. There was provision write back, which was there even in previous quarter. Adjusted profit came at 310 crores, which grew almost 30% sequentially. Net NPA was stable at 2.1%. ROA increased from 0.7% to 0.9% in this quarter, of course helped by provision write back. What we have seen that larger banks have taken the benefit of provision write backs or even net interest margin, and they have cushioned the balance sheet by doing aggressive provisioning or making higher credit cost. But in case of smaller banks like J&K, they have not done that. So that can be seen as a slightly aggressive kind of policy of the bank. Stock is trading, although cheap, at 0.8 times price to adjusted book value, but it has seen a good run up in the recent past. So from near-term perspective, can be neutral, but long-term we remain positive. Prudent Corporate Advisory Services result is okay. It is a distributor of mutual funds with focus on equity funds specifically, which forms more than 90% of its AUM. Revenue grew 7% sequentially. Operating expenses grew 10%. Thereby, EBITDA was flattish sequentially. Year-on-year growth in equity AUM was at 18% against mutual fund industry growth of just 8%. So company has gained market share. Stock is trading at PE of 43 times PE, trailing EPS, and has run up in the last quarter. So one should, we think the stock can remain sideways in the near term, but long term it can be a compounding stock. Thank you. That's it from my side.
Good morning. Container Corporation has posted below expectation set of numbers for the quarter. Although the revenue came in at 0.9% QOQ at rupees 2004 crores. However, EBITDA margins dipped to 21.5% versus QOQ of 25.5%, which impacted the profitability of the company. Stock is trading at 27.2 times FY24 EPS. Zensar Technologies has posted broadly in line set of numbers for the quarter. Revenue dipped to 146 million versus QOQ of 155 million. Dip was negative 5.3% QOQ in CC terms, impacted majorly due to furloughs. However, the margins have improved to 11.3% versus QOQ of 8.5%. Stock is trading at 12.4 times FY24 EPS. Thank you.
Yeah, good morning. Ultratech Cement had its con call yesterday, wherein the management has indicated the demand to remain robust, mainly driven by infrastructure growth and rising demand for urban housing. With a good monsoon, the rural demand is also poised for a strong growth. Petcoke prices have come down from $200 per ton to $175 per ton, and a similar level of cost reduction is expected in Q4. Cement prices are likely to remain flattish quarter on quarter, with a marginal increase of 2 to 3% in the northern region. Management expects EBITDA per ton to be in the range of rupees 1,000 to 1,200 per ton going forward, largely driven by volume growth, with capacity expansion to be around 90%. So the outlook remains positive from a long-term perspective. On the results front, Maharashtra Seamless result was okay. Revenue came in at 1339 crores, down by 5.3% sequentially, mainly due to shutdown of one of its facility, which impacted production and dispatches. EBITDA came in at 246 crores versus 250 crores quarter on quarter. Although margins have improved, to 18.4% versus 17.7% sequentially. The stock is trading at EV by EBITDA of 5.5 times on trailing basis. Jindal Stainless result was above expectation. Revenue came in at 6,350 crores versus expectation of 6,107 crores. EBITDA per ton came in at 15,900 versus 13,270 quarter on quarter. Margins came in at 8.6% versus 7.3% as expected. The stock is trading at EV by EBITDA of 5.1 times FY24 earnings. Thank you.
Good morning. Craftsman Automation announced its result. The result was below expectation. Revenue came in at 749 crores versus an expectation of 726 crores, which degrew by 4% on a sequential basis, but saw a growth of 35% on a YY basis due to a lower base. EBITDA margins came in at 21.1% versus an expectation of 22%, which was flat sequentially but lower on a YY basis. PAT came in at 51.6 crores versus an expectation of 56 crores. The stock is trading at a PE of 19.4 times FY24 EPS. Thank you.
Yeah, a few more results. Shopper Stop came up with the numbers, and the numbers were in line. Considering that other retail companies are showing below expectation, these numbers looks comparatively positive. The sales has shown a reasonable growth of around 12%, and EBITDA margin also came in line with market expectations. The valuations are also reasonable at around 12-time trailing EV by EBITDA. So outlook continue to remain positive. We will update post this con call today. Then Glen Pharma has come up with the numbers, and the numbers were below expectations. Number got impacted mainly because of the inventory rundown by their customer is still continuing, and their recent launch of the new product also saw a lower offtake, whereas they continue to face supply chain problem in some of their packaging material like stopper and vial and all. So all these problems were there earlier also and are continuing in this quarter as well. So which has impacted the performance of the company in this quarter. Going forward, it seems like the price has corrected substantially, and all these problems are likely to get resolved in 1 or 2 quarters. Specifically, the supply chain issue, company has already tied up with another supplier, and which supply can start in February post approval. And then also company has a good pipeline of launching of product and which can generate good returns. Apart from that, China is also Gland is also opening up in China with one of the product in the current quarter, so which can revive the sales growth. Though results were below expectations, but the valuations are now becoming more of a reasonable, and the stock can be accumulated at current level. Then HFCL has come up with the numbers, and the number has shown good improvement in this quarter. Mainly the margin has improved because the composition of product sales has increased in this quarter, and also the order book has increased substantially from 5,250 crores to 7,000 crores in this quarter on quarter. So that also is positive for the company. Overall outlook looks positive for HFCL as well. Then first sugar company which has come out with the numbers were Dhampur Bio. Dhampur Bio has reported declining set of numbers, though the sales was substantially higher as compared to last year and increased by almost around 100%, but EBITDA remained flattish year on year, and that has impacted the margin, and the margin came off to around 5% from 10%. The reason being that last year company was having old inventory of the sugar, which got sold off at attractive prices. Because if you remember, 1st October, the new government has revised the can prices, but company was having the old inventory before 1st October last year, and that got sold off in this quarter. So going forward in the next quarter, then it will be more of a aligning raw material cost for both the year. So that will get reflected in the next quarter when the result will be declared. So overall result apparently looks declining, but seems like looking at the increase in the export prices, and then also some marginal increase in ethanol prices as well, and higher can crushing in this year. From here on, result can show improvement in the next quarter. So Amit, if you can take up from here now.
Yes, thank you, sir. Good morning, everyone. So sorry for the technical error before. So on the derivatives data front, if you look at the overall structure, as we are mentioning from the previous trading session also, that Nifty has shifted in the new range of 18,050 to 18,200 level. Now, as for the OI positions, if you look at the overall structure from the yesterday basis, it is quite visible that from 17,900 to 18,200 strike. put writers have got added up heavily in the yesterday session, while against that the call writer positions got liquidated, and the call writer positions got shifted on the upper end towards 18,300 level. So it is very much necessary for the Nifty in today's trading session on the spot basis to give closing above 18,200 level. Once if Nifty gives a close above 18,200 level, then the put writer positions is likely to switch the positions of a support from 18,000 to 18,200 level on the upper end. So this is a positive sign. While if you look at the PCR OI also and the India VIX also, India VIX is continuously coming down from previous one week. So we expect India VIX has came at a stable rate, and we expect the volatility to be less in the market, as we are witnessing that India VIX. As per the India VIX, once if India VIX again goes above 15.5 level, then only we might expect the volatility to get increased in the market. While towards the budget session, we expect there would be a buying trend in the market. While against that, if we look at the other two indexes like Fin Nifty and Bank Nifty, Fin Nifty is having expiry today, so we expect a Fin Nifty, the OI positions of Fin Nifty is like from 18,800 to 19,200 mark. The IVs of Fin Nifty from the call front is continuously getting added up. Whenever from the call side the IVs get added up, it means that the call buyers are increasing in that strike. So we expect a Fin Nifty is turning out to be positive, but the only resistance zone for the Fin Nifty would be 19,000 mark. Once the Fin Nifty gets clearance of 19,000 level, then we expect the buying to be generated towards 19,250 level on the upper end. So wait for in today's trading session. Once the Fin Nifty gives a closing or gets stability about 19,000 level, then we might create a new long position. So on the spot front towards 19,250 targets. While on the stock specific, we expect IRCTC, ONGC and M&M Finance. These three counter is continuously getting added up OI positions. While in yesterday trading session also we have recommended these three counter, and we expect the buying trend to be continued in today's trading session. So that's it from the derivative front. Thank you.
Yeah, Harshal, if you can take over.
Yes, thank you. Thank you, sir. Good morning, everyone. Um, we have witnessed a rally in gold, and it may continue. So buying around 56,900 is recommended, and one can maintain a stop loss of 56,700. Overall, prices are expected to test 57,300, 350 on higher end. Silver prices are yesterday we saw a correction, and it breached 67 500 support area, and again managed to close about that. So today one can buy around 67 900 to 68,000 and maintain a stop loss of 67 500. On higher end, 69,000 could be the possible targets. In crude oil, 66 70 where we recommend to buy and maintain a stop loss of 6,600. On upper end, 6750 to 6,800 seems to be the possible targets. In natural gas, prices could consolidate, but however, we expect a pullback. So buying around 275 to 77 is recommended, and maintain a stop loss of 265 on lower end. On we can expect 290 to 300 levels for a pullback. In metal front, the rally seems to continue, and copper looks good to test 790. So buying around 780 to 781 is recommended, and maintain a stop loss of 777. Aluminum also looks good, buying around 226 to 225.50 and maintain a stop loss of 224. On higher end, 228 to 30 could be the ideal target, and zinc also heading toward 302. So buying around 98 98.50 98 and maintain a stop loss of 96.50. That's it from us. Thank you very much. Ria, you can continue.
Thank you, sir. Good morning, everyone. So on the currency front, after opening with a gap down, we saw a sharp rise into the USD INR on the technicals level. This has most probably happened because of the intervention, and we will see the effect of it in the forex reserves at the end of this week. So it is most likely that 80.50 is the downside that RBI has set while going forward. So any gap down like such happens, it's a very good opportunity to go long into the rupee. Today it has opened at around 81.40 and trading at around 81.62. You could see some pullback towards 81.80. And it is most likely to trade within the range of 81.95 to 81.35 in today's session. So that is the consolidation range that rupee could see in the intraday session. In GBP INR, there is a strong pullback. Pound has been doing very good and has been outperforming. This is because though there is some cool off that has happened into the inflation, but it still remains in double digit, which is fueling that a Bank of England does not have much of the option to go hawkish on its to go dovish on its policy, and rather do a strong rate hike as compared to the Fed, which will most likely see a slowdown into its rate hike. So yeah, it could further rise above the level of 101. It is right now trading at around 101.10. You will see further rising towards 101.50 and 102 levels in near sessions. So go long into the GBP INR. For Euro INR, it is also trading on a positive side. 88.85 is the open. You could see the pair heading towards 89.25 in today's session. You can go long with an SL at around 88.45. You could JPY INR will remain under a selling pressure. So any rise should be an opportunity to go short into the pair. If you look at USD JPY, it has regained the level of 130 and it could even go towards 132 because the Bank of Japan remains deep dovish in its policy. So you could see the pair going towards 62 levels in your session. So any pullback should be an opportunity to go short into the pair for the level of 62.50, 62.30 in today's session. So that's all on the currency front. Thank you.